Hello, fellow traders worldwide. This is Gabriel. Welcome again to my channel, Forex.Real.Trader. Just a reminder, I am an independent Forex trader. I am not affiliated with any broker or FX company. I am here just to share with you my humble knowledge about this fascinating industry that I have been interested in the last 10 years. Before we dive in, let me remind you that I am not a financial advisor. Everything I share in my channel is for educational purposes only. Always bear in mind that trading involves risk, and you should always do your own research before making any financial decisions in order to protect your valuable capital and psychological peace of mind. And remember, if you find these content useful for your trading career, so please subscribe, like, and share so we can build a community of real traders. So now let's get into the topic. Today's topic is about candlesticks. So I want to offer information related to the origins, the basic formations, and how important it is to really understand the candles and how it is possible to combine them with all their sources on our platforms, say MT5, MT4, C-Trader, because when we really understand what a candlestick is and the moment, the timing when they appear, that is going to be a plus in our edge in order to get better results when we are trading. So let's talk about the origins. So the candlesticks, the Japanese candlesticks date back to the 18th century. They were developed by Muneishi Homa. He was a Japanese rice trader. He discovered that market psychology, listen to me, market psychology influenced price movements, and he used sticks in order to predict future prices. This technique was later introduced by Steve Nissen. I'm pretty sure that you have heard about him because he wrote a lot of books related to the functions, the formations, the patterns of the candlesticks. So that is how now we are trading everything related to the candlestick formations and patterns. But I insist, we cannot rely only on one indicator. So just one formation, one candle that shows a reversal or a continuation, we cannot rely only on one pattern. We need to remember the elephant in the last video. So we need to put all pieces together before making an educated decision before a trade, right? So let's talk about now the candle structure. It's pretty simple. In previous videos, I mentioned this very briefly, but now let's go in depth. So what happens when we observe a candlestick? First of all, it doesn't matter if it is green or blue or black or whatever, because that is something that we can set up in our platform. Here, the important thing is to understand why that candle is considered bullish, bearish, or a doji, right? And the thing is this: when we have bullish candles, is because when they start their formation, they open with low prices. So the price is low. And when the session ends, the candle closes at high prices. So here the price is high. Simple like that. The same happens when we are talking about bearish candles. It now opens with high prices, right? So the price is high. But when it closes, the price is low, right? Simple like that, okay? Now, let's see this on our charts. For example, let's see here. Let's see this one, this candle here, this bullish candle. I can see that it opened here, right? When the price was low price, right? And when the session ended, okay, the session ended here, but the real body, I'm going to focus on real bodies. We're going to talk about the wicks and everything, but let's focus on the really important aspect in this moment, which is the real body of the candlestick. Here it closes right? With a high price, right? So here is the open and here is the close. Now let's confirm this. How can we confirm this information? So I activate my crosshair here, around here. The price is 1,139 and it closes the session here with 111,755, right? So this candlestick gained 61 pips. Nice move. But another important thing to observe in here, these candles open and close formation depend, my interpretation, depend on the time frame that we observe it. It means that if I am checking here my 1 hour time frame, means that every single candle here, either bullish, bearish, dodges, whatever, all of them took 1 hour to open and close, to open and close. So if I check in here and I see our candle, this one formed in the, according here, formed on the hour 5 p.m. The next candle, 6 p.m. The next candle, 7 p.m. The next candle, 8 p.m. and so forth. So every one of them took 1 hour. If I move, for example, to the minute, let's move to the minute time frame. It means now that every single candle here took 1 minute for its development, right? So in 1 minute, this candle here opened and closed. Here opened and closed, right? So if I check with my crosshair, that is an evident thing. So I can observe this one at 7 a.m. 48, this one 7:49, 7:50, and so forth, right? Important. It doesn't matter if I am checking the 1 minute or the 1 month. Every single candle takes that exact time frame to be open and closed. All right? That's about the structure. Now, let's see something about single patterns. There are many types of patterns that we can work with, but today's video is focusing on the single constructions. Single constructions are those that involve only one candle to give me a first indication about the potential direction of the market or no direction at all, right? And that is the case, for example, of the dodges. What are dodges? These are basically candlesticks that signal indecision, right? How do they signal indecision? Because there is no body at all, or the body is very small, okay? That is the first thing. They look like a cross, or they look like a big T, right? Or something like that, but no body, okay? So the open and the close are always very near or in the same price, okay? How to interpret them? Okay, the first thing is, do not rely on them to operate. Remember, we always need other indicators. This formation just shows me that there is indecision in the market. And if there is indecision, should I trade? That is the question. The answer is, of course, not. Okay. But if there are other signals, I don't know, other indicators such as MACDs or EMAs or for example, Fibonacci's, and they give me an indication that is possible to trade, all right, I can proceed, but never taking into account only the candlesticks. So what type of candlesticks do we have in here? All right, so we can have doji stars, where let's try to find them in the charts. Let's try to find formations here. see. This exercise is a very good one to observe as a training exercise to observe the charts. For example, I just spot one in here, okay? Look at this. This one here, okay? So we have something called long-legged, right? So this one is a long-leg dodgy formation. Look at this one. Is this candle in here, right? So this is a long-legged, right? It means that it's like this. So you see nobody, and it has the wicks, generally long wicks, right? So this is a long leg dodgy formation, okay? Now let's see, for instance, if we can find a dodgy star. Look at this. Here we have another formation. Look at this one. It's a beautiful one. This is another type of dodge. The name of this one is dragonfly. Dragonflies could be like this, a perfect nobody in the price in here, or with a long wick, or with a small, slightly upper wick in here, but a long wick. So this is what? This is basically a dragonfly. So we just identified long-legged and dragonfly. Let's see if we can find more candlesticks. Dodges. Let's see. I just found another one in here. It's interesting, and you will notice this, that meaningful dodges appear in the moment of reversals, right? Either bullish or bearish, right? Or when there is extreme indecision. But for instance, this one that I just spotted here, this is a dodgy star. I think you can see this one in here. This one, right? This is a dodgy star. Okay? That is indecision. You see? So it's like a little cross, no more. So there was no agreement between buyers and sellers. So at the moment of this candle closed, basically there was indecision. And if we take a look at the whole picture, right? Look at this. Appeared in a moment that is, look at this, coming down, okay, showed indecision. So the market was reversing here, appeared, and look at this. This is the reason, because never trade solely when you spot one signal, right? I know, yes, it's because if I see a dodgy is indecision, or probably I can go, the indecision is because maybe the market is going to go up now. No. Look at this. There was indecision, but the market continued coming down. So never trade if your only source of information are candles. Sometimes they are very clear, but we need to confirm every trade. Before we trade, we need to confirm every signal. This is just one signal, right? So we just spotted another candle. Let's see if we can spot something else here. Here is another. Look at this. This is another long-legged. Look at this. Is this one here, right? This one here. Okay, that's another indecision. Okay, let's see. Here's another, right? This one is interesting because this one falls, this one here falls into the category of a kind of a gravestone, right? Gravestones are like this, but not necessarily they are perfect. Sometimes they could be like this. And this is a similar, not a perfect gravestone, but can be interpreted like that. Here we have another dodgy star, okay? Believe me, this is a very nice exercise, very useful, right? Because you are training your eye to spot formations. All right, here's another, right? Here's a dragonfly. I just spotted that one here. This one, right? So what is the dragonfly background? The dragonfly indicates the potential reversal for a bullish move. And in this case, it happened, right? So it was a reversal. It was coming down, up, down, the formation appearing here, right? And this dragonfly gives me the indication to move, that the market will move in the upward direction, the bullish direction, okay? So it was somehow in agreement with the background of the candle, right? And so forth. You can find, and in different time frames, not necessarily in the 1 minute. You can find this in the 1 hour, 15 minutes, 30 minutes, 1 day, 1 week. Okay. For example, I just spotted one here. Look at this. This one. This one in here. And I am in a different time frame. Okay. So I am in the 1 hour, time frame. And I just spot this one in here, right? So this is a dragonfly. Okay. So when you spot this one, it's because there is indecision and it's probably a bullish reversal. And in fact, it happened, right? So I can see my dragonfly and I can observe that there was a bullish move, right? Good. Again, I repeat, probably you are tired of listening to me saying the same, but do not rely only on one indication. Never trade if you see the dragonfly. Yes, I'm going to trade. No, we need to consider many other aspects before pulling the trade. All right. That's about dodges. Now, let's talk about hammers. So what is a hammer? Basically, a hammer here, right, shows this pattern, right? So the hammer is understood as a bullish reversal. It signals a potential uptrend reversal, right? Sometimes, most of the time, should be reliable when it is at a support level. The color doesn't matter, right? Could be green, could be red, but let's understand it. Could be bearish or bullish, doesn't matter, right? The important thing is to identify and understand the formation. Basically, is like this. The body is small, right? The body is small, and the wick is minimum twice the size of the body, right? Remember, when I encounter a hammer, is because that is a potential bullish reversal. All right, so let's see some hammers on our charts. All right, let's see here, hammers. Let's find some hammers here. Here is one. Here's a hammer. Look at this one. Look at this hammer here, right? This one here, right? It's almost could be understood as a dragonfly, but not really, right? Look at this, gut body. It has a small body, right? So this is a hammer. Was reversal? Yes, somehow it was. Because look at this. Then the move was up, right? Let's look for another hammer. For example, I just spot another one here. Look at this. Here's our hammer. Look at this one here. So I can see this one, this one here. So first condition, small body, okay. Check. And the wick is as twice the size of the body, right? Okay, so twice the wick size. All right, check. So this is a nice hammer. And the direction somehow was going up, going up, going up, going up, going up. Okay, good, right? But remember what? It's not the only signal because it's not 100% and it's highly risky to trade only by watching candlesticks, right? We need other confirmation elements, right? Good. So that is about the hammer. Now let's move on to our next pattern, hanging man, right? So the hanging man, right, is this is a bearish pattern. Has the same formation, right? Forms exactly as the hammer, but now this one shows me a potential for a downtrend. So I'm going to see the hanging man when the market is on the top, right? And it's going to start the correction. Do you see that with the hammers, we saw him on the bottom of the move? With the hanging man, we're going to spot them in the upper side, okay? And the same, so the bot is small and the wick is as twice as big or bigger, of course, than the rest of the body. So let's spot some hammers here. Okay. Let's see. So I'm not focusing my attention on the button. I'm focusing my attention on the top, right? Just to see if there's a hammer in those areas. Let's see. So, spot. As you can see, they are not very easily spotted here. I got one here. Check this out. Here's a hammer. It's not a meaningful one. It's not a meaningful one, but it's a hammer. Look at this. Is this one here. This is, I'm sorry, this is my hanging man. Hanging. All right. The body is small. Yes, a small body. The wick is lower and, of course, is more than twice the size of the body. And after this one appeared, the move was bear, right? So this is a nice hanging man. Let's see if we can spot another hanging man. Let's see. Ah, look at this one. This is beautiful. This hanging man is excellent. Look at this. Right on the reversal, there was a nice resistance. Ah, this is an excellent one to show you. Look at this. This hanging man is this one here. Let me show you. This hanging man, this one, appear right on the verge of this SMA. Right? This is a simple moving average, and the simple moving average worked as a resistance. So when the hanging man appeared here, right? Look at the move, absolutely bare, right? And you get confirmation here with the next candle. So it's an excellent formation here, right? And you see, now I have, of course, I wouldn't trade it yet because I need to confirm all the things. But at least I have an SMA to confirm because it worked as a resistance place in this area, right? When it formed. And the next move indeed was a bear one, right? So that is a very clear hanging man. Let's see now our next pattern. Hanging man versus hammer. All right. Is what I just showed you. The hammer appears in our charts basically in the bottom area, right? So when there is coming down and is a potential correction and the move is going to be bullish. And the hanging man appears on the top of a bullish move, right? Here, indicating a potential downtrend, right? But if you observe, they're exactly the same. So the hammer and the hanging man, the formation is exactly the same. There is no difference. And remember, both cases, the hammer or the hanging man could be green or red, bullish or bearish, whatever. The important thing is in the moment they appear to have a good read about them, right? So that is basically the difference. But different in the construction, no, it's exactly the same. Inverted hammer. What is this one? Okay, with the inverted hammer, okay, the function is a potential bullish reversal. So the hammer is like this, right? This is the hammer. So the inverted hammer, the wick is not in the lower part. The wick is in the upper one, right? And of course, it is twice as big or even more than the real body of the candle, okay? So the function, as I mentioned before, is to signal a potential reversal from a downtrend, okay? Is a small body with a long wick in the upper side, okay? and it shows me an attempt to buy or push prices higher, right? And is the interpretation. Let's see them in our charts. Let's spot some inverted hammers. Remember, the wick is in the upper side, right? Is up. So let's see here. Some inverted hammers. Ah, I just found one. Look at this one here. Right here. Excellent. So in this case, I can observe my inverted hammer is this one here. Look at this. In fact, there are two. Interesting case. Very interesting case. So I have inverted hammers. Here it confirms something that I mentioned before. It doesn't matter the color or the formation in the foundation of, is it a bullish inverted hammer or a bearish inverted hammer? It doesn't matter. The important thing is that it appears like that, as a small body, long upper wick, small body, long upper wick, and look at what happened next, right? So moved in a bullish direction. Okay, this was a very interesting case that I spotted here. Let's see if we can observe more inverted hammers. Inverted hammers. There's another one here. Mm-hmm. Let's see. Here, no. Let's see. Here. Look at this one here. I just spotted this one. Look at this. Inverting hammer here as well, right? Look at this. It coincides. It got a small wick in here, and the upper wick is longer. Look at this one. Okay. This is my inverted hammer. Look at this. What does the function say about the inverted hammer? That is a potential reversal, right? And it happened. So I got my inverted hammer and the reversal, because the next one, here's a confirmation, and here, right? So it went into a bull or long move, right? That's an inverted hammer. Okay, what is our next formation? Shooting star. The shooting star, what is the foundation here? Basically, is a bearish reversal, right? It's a bearish reversal. As you can see, the formation is as the inverted hammer. And as happened with the hammers, this one is valid, or we take it into account when it appears in the upper moment, right, of the trend. So when it is indicating me that there is going to be a correction and it's going to calm down. And you see, the construction is the same. So basically, I have a small body with a long upper wick, twice as big or more than the real body of the candle. So let's see if we can see some shooting stars in our charts. See, okay, let me do that. Wow, I just found one. It's this one here. Look at this one. It's a beautiful one. Excellent example. Look at this one. But I'm going to keep it like this. Look at this. Guys, this is observation, right? So that's the reason, because I'm fascinated, that I have been fascinated for this industry, I mean, for more than 10 years, because it's an art. It's the art of observation, analysis, and you can find things, right? So this exercise that I'm doing here in the video is something that you should do as a routine, right? Not with the intention of trading, no, with the intention of observing, right? To have more power in your vision when you spot when you spot shooting stars, when you spot different hammers, or you the gravestones, things like that. Okay, look at this. Just spot here my shooting star is this one here, right? What is the foundation of the shooting star? Bearish reversal. Okay, so look at this. The previous move was going up, going up, going up, going up. So it was bull. And when the shooting star appeared, then it started to come down in a bear move, right? So that's a very interesting example that they are effective, but always we need to confirm with other indicators this very formation. Okay, that's a good one. Let's see if we have another formation. Now let's talk about the spinning tops. Okay, so spinning tops are more common. These ones are very, very common. Let me show you here. Spinning tops. These are the spinning tops, right? What is the difference? I wanted to do a contrast between spinning tops and dodges. Dodges, definitely nobody at all, right? But the spinning tops have small bodies, right? If you can't see the color, that is a spinning top. If you just see the line, it's a doji, right? So spinning tops could be bullish or bearish, but here the important thing is the foundation. The foundation is similar to the one of the dodges, is indecision, right? Basically, that's what it indicates. So definitely, we do not trade. We just wait for confirmation indicators, right? So when you see them, it's because there is indecision, okay? It's like a bigger doji, to say so. So let's identify them in our charts, right? For example, I think I just spot one. Yes, I just spot one. Is this one? This one is a doji. Look at this. Here is my doji. Sorry, my spinning top. So I have my spinning top here, right? Remember, it doesn't matter the color, either red or green, whatever. The thing is, it doesn't matter if it is bullish or bearish, they show indecision. Now, this is a question for you guys. It is right next to what candlestick? What is this, right? So leave your comments, right? Just to confirm. What is that? And if this candle somehow confirms something related to the direction of the market, right? Okay, my fellow traders, that's all for today. Once again, thank you very much for your support. That is the reason because I continued uploading my videos for the coaching sessions. And remember, if you find these contents useful, interesting in your trading career, please do not hesitate to subscribe, like, and share. Thank you very much, and see you in our next session. That is going to be also about candlestick patterns. And the next video is going to be about complex structures for bullish patterns, right? So thank you very much. Have an excellent day.